Hello everyone, let's continue my thread about forex market, and now we will look at one of the most popular currency pairs there is, and this is Australian dollar against Japanese yen. Well, the drill will be similar as with other markets. We will go to some historical trends and then we will see is this market actually relevant or good for traders. So let's get started. Let's start with early 70s, and here's one small context. Japanese economy was killing it in a good way in the 70s and 80s, and everyone was thinking that it would surpass economy of United States and make Japan economic powerhouse. Well, it kind of worked out because, yes, as you know, Japanese indeed made very good progress in their economic growth and made huge multinational companies which exported their cars, consumer goods, electrical goods and anything else across the world. But that trend somehow stopped at late 80s, and it's very evident in currency markets because, as we could see, Japanese yen make huge increase since late 70s. Like, this is huge killing, and then made some rebounds there and here and there, which was like exceptionally well currency markets from late 70s till early 80s, with huge uptrends and downtrends and smaller shorter terms in between, and that continued even from 1985 up until 88. Like you could see here that it went straight from 250 to 125 without stop, you know. That's why currency traders in the 80s made so much money, because there was absolutely stunning trends. But then here's what happened. Japanese economies kind of started to slow down, and if you look at Nikkei at that time, Nikkei actually made all-time highs at late 80s, and it actually haven't recovered that much from those heights. And then Japan went to recession and made huge monetary stimulus packages which kind of negatively impacted its currency markets in the context of trading, of course. And as you can see now, that in the next years, since 90, actually there were one good downtrend from 160 till 80, and then it recovered from 80 till 140, but the magnitude compared to previous trends was none. And you could see that those trends were very slow, so for traders these markets were much slower than these markets which were extremely good. But nevertheless, there were still a couple of trends in the 80s when markets continued to fluctuate, as we could see here now. The markets went from 140 to 100, then it slowed down, and those trends became much smaller in magnitude. As you could see that since 2000 trends were only from 100 to 130 and then back to 100s, and for several years it stayed at those levels for like 17, 130, 18 again. Of course, for shorter term traders it will have something, but nowhere near the magnitude it was in 70s and 80s. And actually it slowly started to climb since 2007 up until 2012, and then thing called Abenomics started when Japan made huge monetary stimulus to weaken yen, and it kind of worked because it went from 80 to 122, but also it was in only in a couple of moves. One was in late 2012, early 13, other was from late 14 to early 2015. And after that, well, I wouldn't call this as huge moves, because if you compare this to Australian dollar against pound against Australian dollar, this is peanuts, this is nothing. And only, excuse me for this nonsense ad, and only this year when dollar rose across the board, it made some decent returns here. But overall, as you see, for last 10 years this was not the greatest market, and actually I would say, in compared to other markets, this market is not what you call the best. And look, if this thesis will hold for shorter term, let's make this chart more closer to short-term traders and see. As you could see, here is one small downtrend, and then there is a couple of uptrends from this good move in 2022 when dollar rose across the board. But without that, you could see there is nothing much in it. Even in 2020 when COVID hit, I wouldn't call these a spectacular markets to trade, because let me see what you think on comments, but these are not actually very good trends for making money. And actually that's precisely my point. Here I wanted to show that yes, this is major forex market, yes, it's actively traded, but it's not very difficult, not very good for trading, because if you have to allocate your resources between several currencies, you have to find markets which are structurally made so that they trend like euro or pound against Australian or New Zealand dollar. These are markets are made in the way that they will make some trends. The Japanese yen in current economic situation, when they from one side has huge exports which boosts the yen, and from other side they are trying to devalue their currency, that hits in opposite directions. And Japanese yen is also perceived as a risk-free asset or safe haven asset, which means that in times of crisis it should have to strengthen in its value, but it doesn't do that because dollar is kind of similar currency, so they cancel each other out and don't make much move for great trends. And that's the thing, and that's what I'm saying. If current situation against structural fundamentals wouldn't change, I certainly wouldn't recommend this market for trend traders or swing traders, because as I told you, there simply isn't much there. And if you want to make some money on these trades, you have to make huge leverage, and that's not worth it. You could allocate my assets to better trading currencies much more easily and make higher probabilities for good trends. And that's how it is. You have to look at different markets. There are some markets which you might not know, which will provide excellent opportunities. And there are markets which are traded by anyone, but actually those markets are not that good. This is trading, and this is something that we have to bear in mind. So with that said, if you like what you see, make sure you are following me on my social media and stay tuned for my next videos. Bye.